This is the briefing for Friday, October 28th. This week I've been talking in the briefings, I've been talking about the potential that the rally off of the recent low is basically a counter trend move. And I talked about it last night also, and I talked about the divergences that have occurred within the stock indices, which became more exacerbated in today's trading. But I want to kind of review that in just one more time. Now, there are certain characteristics that counter trend rotations have, and I'm not going to go through all of them in this briefing, but a lot of times they develop into three steps where you have the potential for equality between the first leg and the third leg, and then sometimes the second leg is a retracement of 50% of the first leg. But it's not always, and there's always areas. They're not exact points. Every once in a while, I'll get it right and get an exact point, but it's really not reflective of that. Especially when you're looking at a longer term chart, like a 5-minute chart, an area is going to be a much smaller area than a daily chart, where you have to give more leeway because of the length of time of the time frame that you're looking at. Now, what I did, and I covered this, I think I covered this for several briefings, is that this is the spiders, and you can see this is a 3-step counter trend rotation. Now, this 390 area is the area where leg 1 is equal to leg 3. So we are right at 388.92 closing today, and so basically we're there. It does not preclude it from trading above that level, but we're basically right at where, if this is a counter trend rotation, then we should see we may see a higher high on Monday and then a retracement. And the same thing is true with the Qs or the NASDAQ. You can see 290 is where there's equality between leg 1 and leg 3. And it really hasn't quite made it to that point yet. The Dow Industrials, this is the diamonds, and I'm working with ETFs here, so I wanted to keep it relevant. This is the diamonds, and what was important to this whole move was the fact that we have a downtrend. We have a series of lower highs and lower lows, and then we broke this last lower high, I guess 3-4 days ago. And we've really not done that in the NASDAQ or the Qs, but we did that in the Dow, and the Dow has really extended its move much higher. So the intermarket divergence here is pretty significant. Now you can see that the spiders, or the S&P, has traded up to equality. The NASDAQ has really not, and has not taken out this lower high. Might have taken it out by a few points right here, but really has not significantly taken it out either. So there is a pretty significant divergence between the Dow being the strongest, the S&Ps being the middle, and then the NASDAQ being the weakest. Also, one of the characteristics of a counter trend rotation is it typically happens on lower or declining volume, and you can see that is certainly the case here. Now the Dow is just completely different, because we have increasing volume, except for today where we had lower volume in there. And then of course we get divergences in market breadth, and you can see the divergence that occurred in today's trading. Now all of this would basically give us enough information to say potentially the higher probability is that we have a counter trend rotation, and that this is a run in 1 degree of time, and this is a pause in another degree of time, and that the potential for another leg lower is certainly significant and is certainly there, and it is. The problem with going forward next week is we have a significant news event that can change the perception of value on the part of traders and investors, and that is a Fed announcement on Wednesday, and then a briefing after that announcement on interest rates. In my opinion, I think the market is anticipating that the Fed will raise 75 basis points, but they will hint that they are going to potentially start slowing down on the interest rate increases. And I think that is the environment that is changing the perception of value now, and potentially making this a greater degree time and price move. Now, if the Fed does come out and say that, then potentially this is not a counter trend rotation, but that we have put in a bottom and a significant bottom, and we're in the process of rotating back through this range. So this is the spiders on a daily basis, and you can see the rotation that occurs in the market. Then you get a vertical development and rotation, vertical development, and then more significant rotation. So this could be just another rotation back up to test this 430 area. Important to this is if you look at volume in the spiders, you can see it declining. You can see the divergence that occurred in market breadth in today's trading. So basically 390 is next upside resistance in the spiders, and above that is going to be 410. Now I can rest assured that if we trade through 390 the first part of the week, or even after the Fed announcement, and you get breadth that's stronger and volume that's beginning to come in, then that would make the probability of this being counter trend lower, and the higher probability is we're in a rotational pattern where we're potentially going up to test the 430 area in the spiders. The same situation in the NASDAQ. You can see the rotational pattern that's occurring here. 290 is where there's equality between leg 3 and leg 1. Next upside resistance, though, is at the 300 area, and then above that is 320, and then potentially the 335 area as well. NASDAQ breadth diverging, volume in the Qs declining, and declining pretty significantly. Now, in terms of the overbought and oversold condition of the market, we are basically slightly overbought. Those of you who have been listening to these briefings know this indicator is fairly reliable. It is a breadth-based indicator that I've constructed, but we are converged, and we are converged in the NASDAQ. You can see the NYSE is a little bit more overbought than the NASDAQ. NASDAQ is really not yet overbought, so this does allow for a continuation of the rally that we saw in today's trading. So basically, this does not necessarily tell us that we're going to see a turn to the downside, but it does suggest that we're getting to the point of being extremely overbought. And I want to make one more comment about this. The reason that we didn't reach, and I had a couple people ask me today whether we were reaching a point of being extremely overbought based on this indicator, and I said, no, we're not. And the reason we're not is because breadth was not very strong in today's trading, which tells me that, one, the volume was low, and in fact lower than it was previously, which suggested it was not attracting new buyers, and two, that it was minimally broad-based, but not significantly so based on what happened with breadth. You can see we're only 1,600 shares positive in the NYSE and 1,600 shares positive in the NASDAQ as well. So it was, from a price development perspective, the rally this week has been significant. From an internal perspective, from a development perspective, it has been weak, and it appears to be weakening. I want to point out one more point, is that it is significant that if we have a Fed announcement that hints at any type of easing or reducing the rate of increase of interest rates, I think the market's going to take that very positively, and we're going to see potentially a turnaround, and we'll see price continue to move higher, and we'll see the internals strengthen to support that move. However, unless or until the internals strengthen, the risk is still to the downside, because this is just simply not bringing in new buyers, and the number of companies that are trading higher minus the number of companies trading lower, meaning breadth, is not increasing. In fact, it is decreasing. Looking at total volume, this volume is volume for the spiders and volume for the Qs, and you can see it is declining as well. Now, looking at total volume on the NYSE, you can see that it has declined over the last week, and NASDAQ volume, total volume on the NASDAQ has declined as well. So even though we had a fairly good move this week off of the lows from the previous week. The internals are not strengthening to support that move, and unless or until something happens, which could be the Fed announcement or the briefing afterwards, the risk is to the downside, and we are still in a counter trend rotation, but with much more price development and with any strengthening of the internals, that would change that analysis completely and suggest we are in for a much greater degree rotation all the way up, potentially test the 430 level. Have a great weekend. I'll pick this back up on Monday. Should be a very exciting week next week.